Hey, what's going on, y'all? It's Bryson Powers back again with Jon Brooks, the man, the myth, the legend, talking a little bit about market updates and what's going on in the economy and how it's affecting the housing market. Obviously, there's been a lot of changes since the last time we talked, John, and I think a lot of people are curious as to what's going to happen from here. So, thank you so much for your time as always, and let's get into some markets, man.
Yeah, let's jump in. There's been some major changes in the last 6 weeks that we would love to discuss with you. So let's hop into the data and talk about what is going on in Northeast Florida and around the country, Bryson. So this is hot sheets from the multiple listing service. And there's a lot of data on here, which is probably mumbo jumbo to a bunch of people who have never seen it before. But Bryson, can you interpret this for us? What do you see going on here?
So a lot of people who aren't familiar with this is our hot sheet. This is kind of what we get to see as a high level overview on the MLS. And it talks a lot about various key metrics that we like to see. For us, we haven't seen a lot of new inventory the first half of the year. We haven't seen a lot of new back on markets or price changes. And when you look at this at an overview, this is massively different than what we were seeing about 3 months ago, right? When we were starting to see the rate hikes and everything, we're starting to see the effects of it now. So as you can see from here, we have 1,359 new listings in the past week. And our inventory in probably the first half of the year, even the back half of last year, was hovering anywhere from 1,800 homes to about 2,400 homes on market. So when you see 1,359 new listings come on the market, on top of the fact that we also have 321 back on markets, that's a huge amount of new inventory or inventory coming back on the market that we haven't seen really at all in the past, multiple years. So those were the first things that stuck out to me, as well as the price changes too. I think a lot of people are having to temper their expectations because, you look like a genius, John. And we kind of talked about this last market update. When you look like a genius when everything's going up, it was very easy to sell a home because everybody was buying. There was low inventory, rates were low. We were all having a great time. Now we're starting to see that's changing a little bit.
Yeah, I mean, it has completely changed in the last 6 weeks when the Fed raised their interest rates. They've provided guidance. The affordability factor, which we'll jump into, is one of the reasons behind this. But if you just look at this spreadsheet right here, you have 1,359 new listings come on, but you're only closing 911. So that gap there is the number of homes that are going to remain on the market unsold. So we're starting to see a really big increase in the number of active listings on the marketplace, more back on markets, more people reducing the price of their homes, and expireds. I mean, there's 172 expired listings. That is not something that we have seen for the last 2 years. So this is just an indication that, look, things are changing, and they're changing really rapidly. And it's weird because this time of year is supposed to be the really hot time of year. And then also we're getting reports in from agents who are listing properties, and they're getting 2 or 3 showings within a week's time with no offers. And this has not happened for 2 to 3 years at all. So obviously things are changing. This is another report from the Northeast Florida Association of Realtors that shows the change from last year. You can see that prices are up 24%. Interesting fact here, closed sales are down 15%, but inventory, as you just mentioned, has gone up 50% in the last 6 weeks. So inventory is going up and closed sales are going down. Days on market is now flat and actually starting to go up. And these are changes that are really occurring quickly. Bryson, can you talk to me about the home affordability index and what that means?
Yeah, so the home affordability index is the median sales versus the median price of a home. So what we're seeing here is that you want this to be above 100, meaning that the median sales will actually afford an average home. We're not seeing that right now. So when we see an 82, which is 18 below 100, we're seeing that the average person, the median salary, is not being able to afford Jacksonville. And what that's doing is it's pushing a lot of people out. I see a lot of migration patterns of people who lived in Jacksonville who need to move up in home or anything like that. Their salary, if they are working within the Jacksonville area, they're not remote work, they're not getting a salary that's parsed with a out of state kind of level of salary, they're having to move outward. So we're seeing a lot of migration to Middleburg. We're seeing migration up to Callahan or Yulee. And we're seeing people getting pushed out of what was traditionally home for them.
Yeah, it's brutal. And just 2 months ago, it was at 100. And just because of interest rates going up the last few weeks and prices continuing to go up just a little bit, it has now become unaffordable for the average person with a median income of the area to afford a home, which is a huge red flag. The only other time we've seen it this low was in 2007.
Right. And we all know how that turned out. So,
Yeah.
yeah, this was a big one too. And I know we talked about it yesterday, John. This is a bombshell report that new construction sales, which were the hot commodity last year, if you couldn't find a house, you went to new construction. And we see that in this graph where you see January 2021, that's when new construction sales were reaching some peaks, man. Everybody was scrambling to get in. A lot of new construction was permitting or pre-permitting exactly the build, exactly what they were going to put in. You didn't get any choice in it. And they were treating realtors like they were scum of the earth. And now we're seeing ramifications from it. Talk a little bit, John, about how this is kind of a leading indicator of a market shift.
Yeah, I mean, new construction sales are starting to fall dramatically. Any sort of shift that you see in the market, the first two things to go are new construction and luxury sales. And new construction coming down 26.9% year over year is interesting. Now it's coming back to a normalized level, so it's only telling you so much. Where it goes from here will be extremely telling. But what we're finding, Bryson, is that people who have locked in these 12, 14-month contracts on the bill, they have not locked their interest rate. And so rates are still going up, and they're terrified that if they go up too much, they will no longer be able to afford the home. The property will come back on the market. There's going to be a ton of inventory that will have to come back on and be resold, and who knows what prices those will go for. So this is just a gigantic red flag. This also is a red flag for the number of people who are still relocating here that want that newer type of product. So this is an indicator that we just have to keep an eye on to see what the market is actually doing and why it is doing what it's doing. Inventory is moving up. This is just a 7-day moving average. So if you can see down here in the corner, it's starting to pop up, and this is for across the United States. Just a good visual to see the direction of what's happening. Another visual right here, inventory is now going up nationwide. As you saw, inventory was dropping, and now it's coming on, and it's coming on at a very rapid rate. So this isn't, a slow change. This is like a snap of the fingers type of change where inventory is starting to come on. So I would expect this to continue its trend of moving up. And another factor is that existing home sales have fallen every single month versus last year. Now, this isn't too much of a surprise, because what did the Federal Reserve do? They pumped a lot of capital into the system. It created, artificially low interest rates so people could go out and purchase more homes. Now the opposite's happening. They're raising rates, capital's coming out of the system, and people can't afford the homes anymore because it's getting more expensive. So home sales are starting to fall. I don't think home sales are falling simply because of an inventory problem anymore. That was the original thesis over the last 6 months. Home sales are falling because there's a lack of supply. You cannot say that anymore because supply is now going up, and home sales are starting to go down at the same time. So for us as real estate professionals and business leaders, you don't need a weatherman to know which way the wind is blowing. It's very clear right now, Bryson, that the direction of this market, we've already hit the peak or been past the peak. We were saying on the other call, we thought the peak was, in January, February of 2022. We'll look back and be able to see, but the wind is blowing now the other direction. We still don't know magnitude, but it seems to be pretty extreme. Like we are getting reports on the ground that homes are now sitting that are perfectly fine and normally priced, and they're not selling within the day or two with, 20 to 50 offers, just like they were 6 weeks ago. And that is really telling that we're into a shift. So to summarize, new construction sales are down, existing home sales are down, monthly payments have risen 50% since September of last year. 2/3 due to rate increases, 1/3 due to prices. As we talked about, this will cause a fall through of new construction sales. Housing permits, which is a leading indicator, dropped to a 5-month low, and mortgage applications are dropping as well. So we believe that prices will begin to cool over the next 3 to 6 months, which is a positive for the market until it's not, because if, demand completely falls out, there's going to be an issue. Of course, I don't believe that's going to be the case. There's always going to be people who want to transact real estate. They're not just buying them for investment purposes. They're buying them because of personal reasons, non-economic reasons, divorce, death, etc., moving, job relocation, job loss. People will be transacting real estate, but the direction of prices are definitely going to smooth off. And I think the number of sales will also drop about 10 to 15% between now and the end of the year as well.
Absolutely. No, and what a great summary too, because I think we have been seeing that. Well, one, I know you and I have both been saying buy real estate past year was the best time. I mean, even if you had to pay more, I think a really telling sign of that was that monthly payments have risen 50%, and that a third of it was due to the price increase, which everybody was freaking out about. 2/3 was due to the interest rate increase. And I kept saying, like, it's a smaller number, right? You see 2 point whatever percent to 5%. You're like, oh, that's only a 3% jump. That is a massive jump in your monthly payment versus what's going to happen if you see 20K increase and you're like, oh my gosh, that's a lot of money. No, what's a lot of money is that monthly increase in your payment, and it's driving it. So existing homes, I was actually pretty surprised that existing home were actually pretty close to new construction. Like you said, new construction was a leading indicator, but I expect that to slow at or not fall as precipitously over the next few months as new construction will. And then, one thing that we talked about, John, that wasn't on the slides that we talked about yesterday on a phone call was other factors that are really pushing people out of affordability, on top of the fact that mortgage rates are increasing, prices are increasing or have increased, and we expect them. When we say cool down, we don't mean that it's going to fall back down as much as it's risen over the past 2-3 years. We just mean that it's going to find a sense of normalcy. It's going to plateau a little, or the curve is going to be more linear rather than parabolic, right? So, but one of the things that we talked about, John, was the fact that insurance and taxes are pricing people out of cash flowing investments, pricing people out of affordability, and talk to everybody a little bit about that.
Yeah. So if you're a real estate agent, or you're a customer that bought a house a year ago, or you're talking to somebody that bought a house a year ago, there's going to be a couple things that are going to surprise the customer, which is going to be your taxes are going to be higher and your insurance is going to be a lot higher. When you buy a house, naturally, the tax appraiser comes out the next year, reappraises the property value, your taxes go up. But if your prices are also going up, they're going up a lot more because they tie it to the property value. That's going to impact your monthly payment. In addition, insurance has just been in complete chaos over the last couple of years in Florida, and premiums for some people have doubled and tripled from what they were just last year or 2 years ago. So all of a sudden you have all these people that are on the marginal line of being able to purchase in the first place, that are seeing their new monthly payment, not understanding why it's so much more, and realizing, okay, I'm going to have to pay an extra $300 to $500 a month to live in this home, and they can't afford it. And they're calling in saying, like, what do I do? What do I do? I can no longer afford the house I'm in because all these other costs are going up so fast. So this could be another factor down the line of seeing more delinquencies, seeing more defaults for this marginal group that can barely afford the house in the first place. Which I'm not worried about all those relocation buyers who have money that are coming in, but the people who have already lived in Jacksonville, maybe working, some sort of W-2 job that's just making enough to get by, and they bought a retail price in the last year or two, it's going to be a really difficult time for them, especially if we don't see prices stop going up, because that's what the Fed is trying to do. They're just going to stop prices from going up, and they're going to continue to pull liquidity out of the marketplace to make that happen. But there's other challenges on that side of the coin as well. So I really think that these other issues are not being addressed by the media. They're not being addressed by other people. That's why we felt the need to come on here and share, look, there's other factors at play here. And it's not just simply supply and demand. Because if you look on social media, everybody says the market's not going to crash, the market's not going to crash because supply is so low, demand is so high, etc. Well, demand is starting to come down and supply is starting to go up. And at some point, if it goes the other way, you can see price decreases. Absolutely. I mean, it's happened before, and it doesn't mean that we're overbuilt or anything, but it could be an affordability crisis, which we already know that we're in an affordability crisis. So just that alone can really change the game for people.
Absolutely. Yeah. So when we talk about price decreases, and nobody has a crystal ball, right? I mean, we can only do our best guesses as far as what the data tells us. And I think over the next 2-3 years, we're going to see something that's really telling of where the U.S. economy is, that everybody else is kind of just sitting in a burning room saying it's fine. We are here to be real estate advisors. That's one thing that Momentum prides ourselves on, is that we're very transparent. We provide a 5-star service, and the fact that we give it to you straight. We look at data all the time. We look at what's best for our customers, and we try to act on it. So this is data that, one, we want to share with a lot of real estate agents. We don't want anybody, even if you're not in Momentum, we don't want you misadvising people.
Yeah.
We want you to look at data. We want you to prepare customers accordingly. And we want you to set expectations right, because unfortunately, we're going to see this happen over the next couple of months, where people aren't looking at the numbers and they're going to misadvise their, everything's fine sort of thing, because it has been fine. It's been booming over the past 3 years, where things hit the market and in 2 days they're gone. And we're starting to see a market shift. You're going to have to find the right people who know the market, price it accordingly. You're going to have to know the people who know how to market your property accordingly, who are boots on the ground. They let all your neighbors know. They let the world know. They let anybody who's relocating here know that your property is great. It's in good condition. And highlight the key features. You're also going to have to have people who really know how to negotiate, because the people that are scoffing are going to turn away sound buyers, where you should come up with a collaborative agreement, because now we're starting to see a lot more leverage on the negotiating side start going towards buyers as the buyer pool shrinks up, because affordability is such an issue. So keep those things in mind, everybody. I think that was kind of the highlights of today, and actionable items for anybody in the market, whether you're an agent or somebody who's looking to sell or somebody who's looking to buy. We understand that affordability is an issue, and we're trying to figure out the best way to go about it.
Yeah. And Bryson, for most people, we're already in a recession. There's no question. And the Fed still hasn't even pulled out all their liquidity or stopped buying MBS or treasuries. And what that says is that we're still acting like we're in a recession, but we are entering one now, and they're pulling the funds out. So I think over the next few months, we'll start to see massive changes. It's going to be important for you to follow channels like ours that are actually providing real data and on the ground information, versus other people out there that claim they're gurus or might be just saying one thing to get you to buy their product. We don't need to be saying this to you guys. We're coming on here because we feel a duty to share what is actually going on, so you can make the best decision for you and your family. So thank you for listening.
Yes. Thank you, guys. Seriously, we do appreciate it. We love jumping on here with each other and just kind of talking a little bit about numbers, because we do have financial backgrounds. This is something we're very passionate about, making sure the market is knowledgeable on this, or regardless of what market participant you are. And we want this to be a smooth transition for Northeast Florida in a time that everything just seems so happy and jolly. We do want to temper expectations. We need everybody to realize that this is coming. It for some people, it's already here, like Jon said, and we just need to make sure that we're prepared the best way possible. So, Jon, do you have any closing remarks, anything we missed or anything like that?
Yeah. Deleverage yourself, which is pay off your debt and hoard cash, and opportunities will come up. So if you're listening to this and you're a real estate agent, this is the gift to you, which is there's going to be a lot of people that are going to be dropping out, and there's going to be more market share on the other side of this. And you're going to be able to develop new skills that you've never had before, because things will get harder, and it's an exciting thing, and you should take advantage of it. And if you're well capitalized, you'll be able to do so. So remember, deleverage yourself right now, de-risk, pay off your debt, and just get some cash cushion And if you do that, you don't have to worry what goes on in the market. You can just do whatever is best for your customers.
Absolutely. No, I couldn't have said it better myself. Appreciate your time as always, John. And we'll see you guys on the next YouTube video. Please make sure to subscribe and make sure you follow along for more content.
Awesome. Thanks, Bryson.